Welcome everyone to the CFO Swinger Watch Report technical analysis video for the trading week of February 24th through 28th. Now, the following research in each and every single weekly report is a chance at applying your own learn and earn trading system. On top of that, the combination of the weekly report and this technical analysis video will give you a complete top-down analysis on the overall markets and individual trade ideas. Overall, every report will be giving you full guidance and navigation in the upcoming trading week, allowing you to cut down on the extensive research time that is usually needed to achieve a successful trading week. So make sure to join us if that is something that truly aligns to your trading goals. With that, let's get into the markets. So the S&P 500, or ticker symbol SPY, has clearly shown a change in character. And what is that change in character? Well, based off of last Friday's candlestick, we are in possibly a new downtrend. And obviously we have closed below both of my daily 10, this red line, and my daily 21 SMA, this light blue line, multiple times in the past couple of weeks. But the only thing that is different from last Friday, which is again February OPEX, the monthly OPEX day for the month of February, is that this is a very, very large bearish candlestick. It's one of the most bearish candlesticks out there, with a very long ranged body here, with a very, very tiny wick at the top and bottom. And all of this is accompanied by a very large selling volume. Now, if you take a look in the past here, there's something similar about what we saw in the past compared to what we are seeing now. So if you take a look all the way back to December of last year, mid-December, we had a similar move down. And this triggered a very nice correctional move to the downside, right? So I believe from a percentage perspective, from the all-time highs back then to the lows, we had about a 5.50% correction to the downside. So I'm not saying we're going to have a 5.50% correction. Maybe you might even see a deeper correction to the downside, but this is something to take note of, because again, this is a pretty bearish daily candlestick, and you do not want to ignore this, especially when we have the overall volatility index of the S&P 500 hitting highs. So last Friday we hit a high of 19.03 on the VIX, and this candlestick here is obviously not good either for the bulls short to mid term. Now, I am suspecting that either tomorrow or early into this week, we will continue this trend in volatility expansion as long as the overall selling volume continues to increase for the overall market. And with volatility, overall market vol expanding like this, I would not be surprised to see VIX sitting at the value of 20 or higher by the end of this week, indicating that yes, we are heading for a market correction. So again, if you go back to SPY, right, I don't know if we're going to have that similar negative 5.50% correction to the downside as we saw back in mid-December, but a textbook correction based on percentages ranges from 5% to 10%. Right, I've said this multiple times in the past, so hopefully you guys remember that. All right, so that is a textbook correctional move from a percentage standpoint. Right, so now specifically for tomorrow, I am going to be expecting either a very small gap up, maybe back up to 602, or maybe between a range of 602 to 604, and possibly a continuation of this move down, right? And if we do continue to move down, I'm going to be specifically watching the daily 50 SMA, this dark blue line. So it has provided a lot of good solid support for the past couple of weeks. But with this candlestick printed from last Friday, I am being a bit more cautious now because it seems like sellers are gaining more traction here and getting into more control of how the price is moving to the downside. So if we were to break below this psychological $600 level, it should also coincide with the breakage below this daily 50 SMA. Now, please take note of the fact that the daily 50 SMA is also curling downward. All right, so again, make sure you guys mark this on your own daily time frame charts for the S&P 500. Now, before we get into the first and last swing trade idea for this trading week, I want to take a look at these two specific sectors. So first of all, let's take a look at XLY. We took a look at this last week. Well, as I've suspected, XLY, which is again, this was in the MM list, right? The momentum mentions list in the report. So make sure you guys read the report first before you watch this TA video. So XLY, perfect short on this one. And it has continued to break lower. Now, if you guys don't remember what a consumer discretionary sector means, right? So consumer discretionary is basically stuff like, well, people are buying things that are not needed, right? It's non-essentials, right? So these are things that people are buying with the extra money that they have after they pay off their expenses, right? The things that they need to pay off, and they need the essentials. So again, these are the things that people are looking to get as a want, but not as a need, right? So XLY has definitely begun to break down because of the current economic conditions that we are in, and potentially the future economic conditions that we could be in the next couple of months. And so XLY has been a pretty good leading indicator of what the consumers are feeling about this overall economy. So, with this big breakdown and an official new lower low compared to this previous low here, truly tells me that, hey, XLY should be continuing a downtrend after losing all the major SMAs here, the daily 10, the daily 21, and the daily 50 SMAs. And in fact, before it began to break down, the price had continued to try to stay above all these three SMAs and even retesting it multiple times. But at the end of last week, we have officially continued to move down, resulting in a waterfall move lower and resulting in with a lower low as well. So for XLY, I'm going to be expecting at least a 215 retest or at least a 212.50 retest, which was a previous significant support level here, right? So, as long as it continues to move to the downside for XLY, this one is definitely still a good short in the short term to mid-term future. Now, I want to compare this sector to XLP. This is the consumer staple. So this is the sector that is involved with the opposite of non-essentials, right? So the essentials. So people need things like food, right? We need to eat, food, well, I can't think of other things on the spot, but food is definitely an essential good that consumers need to have, which again, it doesn't matter what economic condition the overall country is in, people need to eat, right? So again, that is an essential. So consumer staples have actually begun to skyrocket higher. And obviously, just based on this daily time frame, compared to XLY, it's the complete inverse based on the past couple of weeks of performance. So last Friday, this one had a massive breakout over 81.50, and I am going to assume that the price would continue to move up higher with higher highs and higher lows, and simply based on the volume associated with last Friday's candlestick, this should continue to move up higher as well. And ultimately, we should be hitting a resistance level around I would say around 83.30ish as seen here, or if you guys can just round it down to $83 as the whole number resistance level. Okay, so for these two sectors, I really want you guys to take a look at these two sectors as I've been for the past couple of weeks, because I think it's a great indication as what's to come in the overall economy and obviously what the markets are pricing in for the short to mid-term future. All right, so with that being said, let's take a look at the first and last swing trade idea for this week, MRNA. Now, for all my CFO Swinger Watch Report readers and all the members in the private CFO Discord community, you guys should know why we have been focusing on a lot of these biotech, specifically vaccine-related companies. Because, well, we have all these different viruses going absolutely crazy, and they're going on a rampage here. And specifically, we have a new virus that is, well, that has been going rampant in the past couple of years, but it's now increasingly becoming a huge risk for the overall animals that are getting sick from this virus. But at the same time, it is becoming an overall market risk that we need to be focusing on. And that's the reason why we're taking a look at mRNA. All right, so mRNA obviously really, destroyed from COVID highs as well from 2021. If you guys take a look at the monthly time frame, I mean, this one was a name that was in the 400s here. I believe the all-time high was 497.49, so it was inches away from that $500 mark. But as people began to kind of forget about the coronavirus pandemic and began to just not really think about getting protected about the with COVID, mRNA has been struggling, and I've written a lot about this in the report itself. So please make sure to read the report. So with all this being said, based on the technical analysis here for mRNA, this one is very much due for a nice mean reversion trade. And I know you guys know that I have been focusing on mean reversion trades lately because of the current market conditions that are showing favorable market conditions towards these mean reversion trades rather than looking at laggards or even leaders, right? Especially the leaders. So with stocks that are down this much, right, these are not even lagging anymore, right? These are just absolutely battered. They are ripe for a very nice mean reversion trade. But with this particular name, there is a catalyst in mind to keep in mind as we are in this potential trade for a mean reversal. All right, so on the monthly time frame first, we've had for the past couple of months, 1, 2, 3, 4, 5, 6, 7, including this month, of straight downwards. Right? This is just falling like a rock for the past 7 months. And so to me, this seems like it's ready for a couple of months in the future to have a very nice mean reversion move back to the upside, or at the very least, retest the monthly 10 SMA that is slowly catching up to the price after it was lost 7 months ago in August of 2024. So from a larger time frame perspective, a higher time frame chart, we are looking at the price sitting at this very significant support level at $35.50, which was a previous resistance level back in the early days, here in the heydays of COVID, right before COVID went rampant. And the price is seemingly trying to uphold this level as a new level of support, or maybe even a huge area of significant demand. So for me here, I would say that the price really has to hold 35.50 this week, not just on a weekly basis, but from a monthly perspective here, as seen on this monthly time frame, to really reignite and start that reversal back to the upside and giving us that perfect condition for a mean reversion trade. All right, now let's go all the way back down to the daily time frame, and I want to pull up the RSI here, right? Because there is a very nice bullish divergence occurring here with the price and with this specific indicator. So we have the price making lower lows and lower highs, and at the same time the RSI has now been recalibrated, quote unquote recalibrated, back to the normal ranges of 40 to 60, and at the same time simultaneously it's making higher highs and higher lows compared to the overall price action. So there is a very nice bullish divergence going on, and I love the fact that the RSI has recalibrated back to the average range here, because that is telling me that there is some sort of strength being developed here for the price to finally stop going lower, right? With these lower lows and lower highs, a textbook downtrend. So as long as we're able to eventually move over and stay over the daily 10, the daily 21, and eventually the daily 50 SMA, which has been a huge crux to any of the bulls trying to get out of the supply area that surrounds the daily 50 SMA, we should be good to go, right? As long as we can get over this daily 50 SMA, as the bulls have tried multiple times in the past here, we should be set to have a nice reversal to the upside and potentially swallow up all of that supply overhead, giving us a nice explosive move up higher and a very nice mean reversion trade. All right, so I'm not providing the entry points or the stop losses or the price targets in this video, so please make sure you guys take a look in the report itself to figure out what the 3-point game plan is, along with the specific option contracts that I'm looking at on this name. And obviously, please read the entire report on this specific name for that fundamental analysis that I've provided as well. Okay, and last but not least, obviously, the price action here is very messy. So try not to, think about the messy price action, because the last couple of days, the price has actually begun to tighten up. So all you guys need to worry about are the current levels that we have here. For example, like 44 and all the other levels all the up to the top. Okay, so again, I've given you guys all the price targets as well, so make sure you guys read the report. All right, so with that is it for this video. If this technical analysis video was insightful and most importantly applicable, make sure you guys smash that like button down below. And if you are new here and you aren't subscribed to the channel, make sure you guys hit that subscribe button as well. And also, if you're watching this video when it just became public and you would like to watch this video a day earlier when it's private, the only thing that you need to do is become one of the many readers of the CFO Swinger Watch Report, which will automatically give you access to the private CFO Discord community, where you can expedite and further your learning in trading. I'm currently offering a 50% off discount code for your first 30 days, and it's a first come, first served basis. So all you need to do is DM me on Instagram at ChartsFocus1 to claim your spot and to claim that 50% off discount code. Good luck, and I'll see you all tomorrow morning.